So I want to explore in this video the idea of a White House put, really the same thing as a Federal Reserve put. If markets crash enough, will the White House get involved at all? And so far, the Federal Reserve, I mean, they've been pretty gung ho. They're going to quantitative tighten for really the next year and a half or so, maybe shorter, maybe longer. But the White House, though, I mean, they're a lot more finicky. It is an election year, and having a really downtrodden market in an election year is a pretty bad sign because 401ks are dropping, voter bases get mad, etc. And really, what's going to happen maybe this summer and fall, you might see stronger rhetoric from the White House itself that could really rally or save markets in general if they put pressure on the actual Federal Reserve, the Treasury, and or the Congress. Now, I want to show you a few clips from Peter Doocy asking Karine Jean-Pierre, the White House press secretary, basically about the markets in general, about 401ks, and kind of what's happening right now, and kind of what their viewpoints are on the market right now.
Thanks, Karine. President Biden once bragged about the stock market hitting record after record after record on my watch. How about now?
Meaning the stock market.
All the gains from President Biden's time in office have been wiped out.
So, as you know, we're watching closely. We know families are concerned about inflation in the stock market. That is something that the president is really aware of. And so, look, we face global challenges. We've talked about this. We're not the only country dealing with what we're seeing at the moment as it relates to inflation.
The talking points here are much more, basically against inflation, not really pro stock market in general. Now, she is right though too. I mean, Europe right now is an order of magnitude worse. Commodity prices there, food, oil, natural gas, it is way, way worse in Europe right now. And even in China right now, it's even worse in some ways than the U.S. right now, because they're basically trying to avoid a real estate collapse potentially as they pop the real estate bubble. So she has some good points there overall. But I mean, this narrative might shift from inflation to the actual markets themselves later this summer, especially by this fall timeframe, as 401ks and everything else start dropping down pretty significantly.
Putin's price hike, inflation, coming out of a once in a generation global pandemic, all of those things play a factor. But the way that we see this is that the American people are well positioned to face these challenges because of the economic historic gains that we have made under this president in the last 16 months.
Okay, so as you say that Americans are well positioned to weather this stock market decline, what is the president's message to somebody who might want to retire, but their 401k is getting wiped out?
So we know that higher prices are having a real effect on people's lives. We get that, and we are incredibly focused on doing everything that we can to make sure that the economy is working for every American people. But we are coming out of the strongest job market in American history, and that matters. And that a lot of that is thanks to the American Rescue Plan, which only Democrats voted for that. Republicans did not.
So first things here, the Putin price hike, that whole narrative's got to go. I mean, I think Americans are kind of seeing past that a little bit. Now, obviously with the oil crisis we have in Ukraine, that's really a direct contributor to Putin's price hike, but really the long-term inflationary effects, I mean, we're seeing it globally. It's all over the world. It's food, energy, commodities. I mean, it's even happening pre-Ukrainian invasion in February timeframe. So that really has got to go. She tried to pivot there to the American Rescue Plan, which again, that was the stimulus and everything else too. That actually contributed to inflation a little bit. But again, I mean, these talking points are very much retroactive, looking back at the market and being like, hey, we did good, we're doing good overall, but it's not really addressing the way forward and what could happen if prices even collapse even further and if 401ks crash even further too. So I mean, really, it's almost like they're out of touch in a way with the actual narrative going on right now. What could happen later this summer and this fall timeframe as we hit basically a liquidity crunch and or a credit crunch and possibly even a housing crisis.
That's why we see the economy in a stronger place than it's been, a historic place than it's been in decades. And so the president's going to continue to do that work. We do have a Federal Reserve, the chair and others in place. We're going to leave that and make sure that they're independent. Leave the work to them. They have the strongest tools in dealing with inflation. They have made this a priority. And so we're going to leave it to them. All right. Go ahead. I'm going to move on. Go ahead.
So last couple was answering a question, basically why they reconfirmed Jerome Powell so late. Basically, they reconfirmed in the December timeframe, but it's really showing the onus is on Jerome Powell and the Federal Reserve The White House does not want to get involved basically in another great crisis or recessionary kind of crisis, basically an election year, which the midterms are in 2022, which is coming up pretty fast overall. So again, this sounds like a bad thing, basically like they're behind the curve. It's almost a positive in a way because they know they're behind the curve. So if we hit basically a great recession or a credit crunch or something happens, the early or late summer, early fall timeframe, they're at that point, they're going to almost overreact more than likely. And at that point, they might either print or quantitative ease a little bit, which should help overall every stock and overall risk assets in general right now, which again, we'll have to see what's going to happen, but it's definitely a possibility for the upside right there. Hey, but that's the White House views in the market right now. It's not too pretty. Also, be sure to drop your comments down below. I think the White House will or will not intervene in the event of a major market crash. Also, be sure to sub the channel in the corner right there. Thank you for your support. And yeah, that's the exchange.